Hey, good morning. Let's go over today's trade plan. So this morning we had the non-farm payroll number out at 7:30 a.m. Central, and so far, for the most part, it's been a non-event. The market is still balanced within a range, but it has held above 65.5 to 67.5, which we're going to be using as the short-term bull-bear zone. And as long as the market holds above this area, the door's still open for an upside break in the S&P. So heading into today, we're really going to be watching which way the market finally makes a directional break, and that's what's going to tell us which side is really more dominant in the market this morning. We know overall buyers have been in control, but at this point, after balancing in a narrow range, the market can either break out and make another all-time high, or if it breaks below 65.5 to 67.5, then we can get a pullback down to 58 to 61, which is the breakout from a couple of days ago, and that would be the first test, so buyers can be active at 58 to 61. You just have to be a little bit cautious because you would be breaking from just a narrow range up here around the 65s, and a break below the bull bear zone could extend towards the bottom of the zone, towards 58, before we get a bounce. In the event of a extended move lower, the 52 to 54 area is still very key, and buyers can still be active here, and the selling could actually shut off by 52 to 54. That would be a short-term range extreme within the context of a overall uptrend. But as long as we hold 65.5 to 67.5, we can't really go bearish on this market. Overall within an uptrend, we recently broke out to new all-time highs, and we're balancing within that day's range. So overall, the bias is still bullish, and as long as we hold above 65.5 to 67.5, there's still higher odds of an upside break rather than a downside break, but we just have to kind of monitor this range and see which way it goes. So as long as it holds this zone, we can get an upside move, and given that we're heading into a holiday weekend, volume is probably going to die down a bit later in the session, so it may not be a big rally or anything. It's probably just going to be a marginal high. So even if we break above 70.72, I'm not expecting a whole lot of range extension. Perhaps we go up towards 75, 76, perhaps the 78 quarter to 80 quarter resistance, but that would be about the limit, I think, on the day time frame. So overall, with the main econ releases out of the way, I don't really have a big expectation for this market to make a huge move in either direction. I think the volume is probably going to start dying down a bit, maybe half an hour into the open, and then we also have an early close. The NYC closes at 12 p.m. Central. Same with Globex here for the S&P. So this is a holiday session for the most part, and that's the reason that it really calls for being cautious and just even more selective, just because the range on the day may not be all that great, especially if it's to the upside. If we extend to the downside, then there could be a bit of an extension, just because you could be catching some people on the long side over here that stop out. So if you break 65.5, then there's a higher probability of a range extension lower. But on the upside, I think the opportunity is somewhat limited at this point. So even though we can break out, it may not be that wide of a range. So those are really the main ideas heading into today. Overall, the market is still balanced within this range. We'll be watching which way it breaks, but still giving more edge to the buy side above 65.5 to 67.5. So heading into the open, let's see how well the buyers can hold it up at the micro bull bear zone, and we'll take it from there.